Hi, you're with Yetta Decker and Ken Decker, and you're joining us for the Inside Track on real estate today. Hopefully you're going to learn a lot. We're going to hopefully learn a little bit as we connect with each other as well. And so today we're going to talk about navigating the world of insurance. Sounds maybe a little dry, but we're going to make it as interesting as we possibly can so that you can have some fun and learn a few things. And we're really hoping that it will protect your investment.
Yes. And if your investment is your spouse, then you might want insurance on them.
Yeah, sure. Anyway, the world of insurance. So today, let's talk a little bit about some of those insurances that maybe are confusing to folks, or maybe they're not. Maybe I just think they are because I used to be confused about them.
Sure.
So, title insurance.
Yeah. Title insurance, typically you buy it when you buy a property. It protects you for certain things like the septic system being on the neighbor's lot, or your garage maybe being a little bit over the lot line, or their garage being on your lot line a little bit, or maybe the fence was put in the wrong place and now you've got a dispute with your neighbor. Anything that type of thing that shows up after the fact that you weren't aware of, title insurance will step in and attempt to remedy the problem.
Right, so they don't necessarily solve the situation the way you want them to, but they will remedy it, whether it be with money, giving money to a neighbor and allowing the septic to stay there. Sometimes has been their wanted approach. Other times they'll actually replace it. It just really depends on the agreeability of the other people involved in the situation and who else is impacted by that title discrepancy.
Right. Now we're talking about septic being on the other neighbor's property.
Yeah.
And you might think that is crazy, but I've seen it twice.
Yeah.
I've seen it twice in our career where a septic system was placed over the lot line and the pipes were actually on the neighbor's lot. One street, every house was that way because the builder built the house straight to the road, and the septic systems were straight to the house, but the lot lines were actually not perpendicular to the road. They were on an angle. Mm-hmm. So every septic system was on the neighbor's property.
Right. And I guess another situation where we've seen that happen is somewhere where the lot was divided down the road. Mm-hmm. And so nobody remembered or realized that the septic was actually sitting on the property that used to be part of this property but no longer was part of the property, had been sold a couple of times subsequently, and nobody was aware until there was an issue with the septic and they discovered that it was entirely on somebody else's property.
Yeah, in that particular case, the title insurance attempted to get the neighbor to agree to having it there. Of course, the neighbor didn't want to agree to that, and so they actually physically had to build a new septic bed over on where the property line was with the proper setbacks.
And so there's title insurance, and then we used to just do surveys. And so now surveys, are they still happening, or are they as important anymore, or they're really two different things, aren't they?
Yeah, a survey, and most of the time we ask for a survey in an offer. Really what we're asking for is a copy of an existing survey. Surveys usually come with a declaration from the surveyor and that type of thing, which generally you're not going to get unless it was just done. So we're looking for a copy of the survey, which really shows the lot lines, that the buildings and the improvements on the property are within the lot lines.
And it may not show septic. Even a survey doesn't necessarily show location of septic. So that wouldn't even have alleviated that problem.
So most lawyers recommend title insurance or just automatically put it in the closing package when you're buying a property. Title insurance is running, anywhere from a couple $100 to $400. It varies depending on the value of the house, and it covers some things that your lawyer then doesn't have to do. Certain searches that they maybe did in the past to protect you, because title insurance is on there. Title insurance says they don't have to do those searches, so you may actually save a couple $100 in searches that the lawyer doesn't have to do, and also. We used to have a copy of the survey for mortgage purposes because the lender wouldn't lend unless you had a copy of that survey. And now the lenders are saying, well, if you have title insurance, you don't need the survey. So if we have a property that doesn't have a survey,
which is still quite common, not to
yes,
have anything
or
existing,
lost or
it's been
too old,
yeah.
and those surveys run, anywhere from a couple $1,000s, right?
Yeah.
So to buy a couple $100 insurance and not have to spend a few $1,000s on a survey seemed to be a good trade-off.
Right. So that took place, I guess, 10 plus years ago now. So it's become very much commonplace, right? So let's talk about another type of insurance. Let's talk about mortgage insurance. What can you tell me about that, Ken?
Well, mortgage insurance, because most of the time you take out insurance is for you. Other than life insurance isn't for you. Life insurance is for the people left behind, right?
Yeah.
And mortgage insurance is like that too. It's mortgage insurance in case you default on your mortgage, you stop paying your payments for whatever reason, you lose your job, you just spend money on something else and don't pay your mortgage payment or whatever. The bank is protected by the insurance that you pay for, and you pay for it all up front. It's not like normal insurance where you pay, $100 a month or whatever. This insurance, you pay it all up front, and then if you default on your mortgage, that insurance will pay the bank the full amount of your mortgage owing.
And that's usually through a governing body like CMHC, or Genworth would also be another insurer. There's a few of them out there. And when Ken says you're paying it up front, you are paying it up front, however you can mortgage it. So you're not necessarily, it's not going to be part of your closing costs. It's going to be an amount that you may be able to spread out over the time of your mortgage. So you can pay even more for it than what looks like face value at the initial cost.
Yeah.
And that insurance, like Ken said, is solely for the benefit of the person that has your mortgage.
And they're going to range from about 1% to 3%, depending on how much down payment you have. The more down payment you have, the lower the insurance premium is.
And with residential property, generally speaking, once you get to about 20% down, then there is no insurance premium. So it's only for the higher ratio of mortgage financing that it is even applicable. Right.
Yeah, now we talked a little, I mentioned life insurance, that life insurance is not for the person that dies, it's for the ones left behind. You can get life insurance either just, there's several types of life insurance. There's term insurance, there's whole life insurance, there's universal life insurance, which are all types of life insurance. And then you can get mortgage life insurance. Now, mortgage life insurance is a premium. You pay your amount. It's usually in with your mortgage payment. And it covers you for the amount of the mortgage. The problem with mortgage life insurance,
or the challenge maybe.
The challenge with it is, as you pay your mortgage down, you actually have less insurance, and you're still paying the same premium because you started at the beginning. So it tends to be a little more expensive
than potentially term. So what Ken's suggesting is you would at least want to investigate the cost of mortgage life insurance, because it's a good idea to know that if something were to happen, at least the mortgage is paid off for your partner and for your family. Or you could choose to just get additional term life insurance, the value of the home or the mortgage, depending on how you wanted to structure things, so that in effect the mortgage gets paid off anyway, but it isn't depreciating or becoming lesser. It's the amount that you agreed to right at the beginning. And
then there's another type of mortgage insurance called disability mortgage insurance.
That's right.
Which is kind of a nice thing. Some people have disability insurance, so if they get hurt or injured or have a disease or something that they can no longer perform their work, it would cover their mortgage payment. Some people don't have disability insurance at all, so to get it on a mortgage payment would be a nice thing, because it's one thing if you're disabled and you can't go to work to maybe not be able to have your car, which you may not be able to drive anyways if you're disabled, but to not be able to keep your home because you can't make the payment because you're disabled, that would be a sad thing. So there is mortgage disability insurance.
Yep. And then we'll talk a little more about your more typical property insurance.
Yeah, before we get there, let's just, and we're not mortgage broker, we're not insurance brokers. We don't sell insurance.
Yeah.
Just we like to educate on insurance because that's one of the questions people have is when they buy a house, and quite often they're starting a family, and it's, well, how much insurance do I need, and what types of insurance, and do I need a will, and all this kind of thing. So we end up coaching people in many areas of their life more than just
Real
how to buy a
estate.
house.
Right.
Yeah, so life insurance, I recommend 10 times earnings of the highest earning person, and I recommend insurance for both spouses. Some people say, well, if they stay at home, why would I get insurance on them? Well, if they stay at home and look after the kids, and you're out there bringing home the bacon, so to speak, if that person, something happened to them, and you had to now look after your kids, plus go to work, pay a daycare person, and have someone clean your house, that's going to cost a lot of money. So you want to have some insurance on them as well as on the main breadwinner, so to speak.
Yeah. So it's a good idea to...
Yeah, and I recommend 10 times.
Right, and whether it's through whole life or universal or term, that really becomes a conversation you would have with your insurance broker. Sit down and really look at your specific costs and your specific needs and what really makes most sense. We have our personal opinions, but since we're not insurance brokers, we won't get into those on the purpose of the show.
And the other types of insurance you can have, again, we talked about disability insurance, and disability insurance can be more expensive if the longer it runs or the shorter the period before you're able to claim it. So it's like the deductible on your home insurance. If you have a large deductible, your premium's probably a little less. And if you have a small deductible, your premium is more expensive. Same thing with disability. If you only wait 2 weeks while being disabled and you start getting money, that's expensive. If you wait 5 or 10 weeks or something like that, then your disability insurance is less expensive. The cost to have it, is less expensive.
And also depending on how much you want to have in place.
And then we have critical illness insurance, which protects you if you have one of their, what they call critical illnesses, whether it's diabetes or cancer or stroke or something like that. They pay out even if you're living, which is kind of neat. That insurance is for you. That gives you time to get the best medical practitioners possible, or take time and rest, take time off of work. So that's another type of insurance that you might want to talk to your insurance broker about.
That's right.
Yeah. Now let's talk about houses, because we are real estate agents, right?
Yes, we are. And so thanks for joining us on the Inside Track on Real Estate with the Decker team. And today we're talking specifically about insurance. And we've talked in the first half really about all the different types of insurance, and now we're going to primarily focus on property insurance. So it's to be able to organize your time if there's pieces you want to listen to again or watch again. That makes it a little bit easier. And also a reminder that tomorrow we do have Scavenger, which is going to be our August 18th, 2012. It's a scavenger hunt in the city of Ottawa. It's the Ottawa Home Hunt. And if you haven't already registered, I'm not sure if it's too late, but at least you could come out and watch and participate that way. So if you want to check out what's going on there, it's ottawahomehunt.com. And we're hoping you will be able to just have some fun with us on that.
Yeah, and we're going to have fun.
And the prize winner.
The prize winner is going to win $10,000, and they're going to be pretty excited. We'll see if we get some media coverage so that you can see the prize winner. And definitely we'll have a video of them on our website at deckerteam.com. Now, if you see crazy people running around in red t-shirts looking for stuff, that's part of our scavenger hunt. So that's August 18th, 2012. We're really looking forward to that. Now back to insurance.
Okay. So house insurance.
Yes.
Tell me a little bit about some of the things I need to concern myself with. I think everybody's familiar with house insurance as a general concept.
Yeah, there's many levels of insurance, and I get quite often questions around, well, the condominium, if I buy a condominium, the condominium already has insurance. Do I need insurance? The answer is yes, you need insurance. The condominium covers the common elements, and if someone's injured, liability on the sidewalk or wherever, covers that kind of thing. So as far as expense goes, your most expensive is homeowner insurance, because you are insuring your property, you're insuring for fire, which, by the way, you need fire insurance if you're going to get a mortgage on a property. So one of the things that your lawyer receives before they close and before they can give the money to you to buy your house from the mortgage funds is they need a certificate from your insurance company that says you have fire insurance on the property. Okay? Now, so that's kind of your top level of insurance. Then next level would be your condominium insurance, and the next level might be landlord insurance because you want to protect your property, but you need a tenant in there. And when you have a tenant, if you're going to rent a property, make sure in the clauses or in the lease, it stipulates that the tenant must carry tenant insurance. And tenant insurance is one of the lower price ones because all you're protecting is your
own stuff.
Your own stuff. Well, and also if you accidentally, let the place on fire and you burn down the whole row of townhouses, God forbid, your insurance needs to cover that.
Right.
So there's that kind of protection too. So we have multi-layers of protection. I've also had people ask me, if I buy an investment property, should I put it as a rider under my home insurance policy? And it's definitely cheaper. The problem then occurs if you have a claim on your one property, it can affect the premiums on both properties, and especially if you get a couple claims, now suddenly all of them rise, whereas if they have separate policies, they stand on their own.
Right, so it can be a slightly more costly venture, however less liability. So it's all about reducing your liability when you're carrying quite a few different properties,
right,
rather than amalgamating them all
right,
together.
And some insurance companies offer a discount if you have your car insurance with your house insurance with the same company. They may offer a discount on both or one or the other, and that can be a cost savings as well.
Okay, excellent. So in relation to property insurance, I know we've had insurance on our homes for many, many years, and I couldn't imagine not having insurance, whether I had a mortgage or not. Having insurance on the house can be a huge asset if anything goes wrong. In particular, fire, that's probably the biggest because then you usually lose everything. The other significant one is water. And that's something that doesn't necessarily get covered on all insurance policies. So it is something you really want to look out for. Is there a water escape clause in your insurance policy? Because there will be a premium attached to that. It'll usually be additional cost or one of the gold package or platinum packages of insurance. However, if a dishwasher fill valve stuck open and filled your house with hot water, which I've personally experienced, that can be $60, $70, $80, $90, $100,000. It can be just as devastating potentially as fire because it gets right in behind the walls and you can get mold and mildews and all that amazing, wonderful, ugly stuff. And so really watching for the details of your policy is a huge thing to look for. Scrutinize it. And it's not uncommon for someone to choose a particular insurance and then sometime down the road be looking at maybe reducing premiums, or the premiums have gone up fair bit, and you don't realize that the quality of your insurance has actually gone down. Mm-hmm. So you really have to look at even your renewal documents in their entirety, and it's something really worth considering, because if you don't need it, well, that's great, you're thrilled, you don't even know what's there, and it doesn't matter, you can buy the cheapest insurance going. However, if you need to utilize it, there's nothing worse than being told that certain things are not covered in your particular policy.
Yeah, I know I've seen lots of people buy a different level. They might have 3 or 4 levels, and they don't fully read what's covered in each one. You can even actually have extra things put on your insurance policy if you have more jewelry than it maybe covers, or you have a fur coat you want covered, or anything of that nature, something special that, or maybe you've got artwork that's above and beyond the normal insurance coverage. The other thing that's very important to understand is that your insurance must cover the value of the property. You must not be underinsured. And people say to me, well, the odds of losing the whole house or losing everything are very low, so why don't I insure for less money? Well, because what happens is if your insurance company comes in, let's say you have a $500,000 house, it's maybe $600,000 to rebuild it. You have a replacement cost on the on all the things inside, and maybe that's another $300,000 or $400,000, and you only insure it for, say, $300,000. That $300,000, if you have a loss, and let's say the loss is $100,000, they'll come in and they'll say, well, your value of your property is $600,000. You're only insured for half, so we're only paying half of the claim, even though the $100,000 is significantly below what you're insured for. They'll say, no, you were underinsured. We're only paying half.
You at least have to watch for that.
Yes.
That's something that would be in the fine print. Exactly how the wording is all done is huge. And so sometimes we think that the only thing that changes our insurance is maybe our premium or how much our deductible is, that kind of thing, our deductible. That's one factor. It's just one small factor. And that's a way of sometimes reducing the cost, because you're probably not going to make a claim unless it's a significant claim anyway.
Yeah, it's kind of like get a great insurance broker, just like a great mortgage broker, because when people shop for, when most of the time people shop for a loan or a mortgage, they're looking for rate. That's really what all they're concerned about is, what's the rate and what's my payment? But there's multiple aspects of a mortgage that affect the future, like what your payout penalties might be if you decide you're moving before the end of it, what your prepayment privilege is if you get extra money, and all kinds of things that really determine whether this is a good mortgage for you or not. And likewise with insurance, a great insurance broker will put you with the right insurance company that's going to have the lower rates for the type of insurance you need. Some insurance companies don't like doing rural properties, other ones will do them. Some insurance companies don't like condominiums. Some insurance companies don't like log homes or stone homes. And so you got to find the right insurance company that fits the type of property and fits you as a homeowner, and then look at the coverage. What am I being covered for? Things like water escape is a big one. And when we talk about water escape, in the country, we don't have the deep sewers, and so the drainage around our house, instead of draining down to the sewer, actually drains to a pit, and there's a pump in it that pumps the water out to the ditch. Well, if that pump fails, you could have water in your basement pretty quick, and if you've got a finished basement, that can be an expense right away. Now, so in the country, we're very common with, hey, we need a water escape clause. But in the city, you've probably heard of cases where you get a lot of water downpour and the sewers back up, and if you don't have the right kind of anti-flow device in your sewer pipe, you could have sewage come up through your pipe into your basement, and that will really ruin your nice family room down in the basement. So really watch for that, because if you don't have water escape clause, they're not covering you for that either. And then, like you said, we had a dishwasher that we turned on at night when we went to bed. We woke up in the morning and it was still filling. It ran all night, hot water. And I had my shower and it was a little cooler than normal. And I thought, oh, I wonder, we had guests, and we thought, oh, maybe they've used up the hot water, and our guests were down in our basement bedroom, and they came in, and the ceiling tiles had fallen down off the ceiling, and there was water leaking down, and he looked at it and he goes, oh, look, Ken took down all the ceiling tiles because he has a leak. I wonder why he didn't call me to help him. And so we both sat there just, life as normal, until I walked in the kitchen and saw all the water everywhere. Yeah, and that's weeks out of your house, and took about $60,000, I think, on that particular claim. And if we didn't have water escape clause, it wouldn't have covered it.
Right. So just really be aware of the particulars of your insurance policy. I can't state it enough. I mean, we didn't know whether we had coverage or not that particular morning. It was kind of a scary little bit of time when we were trying to find our papers and discover what was and what wasn't covered, and what the deductible was, and did we have housing coverage. I mean, there's so many different provisions within a policy that you just want to know what it is you are being covered for or not covered for. Now,
Yetta, you do a fair bit of business in the luxury department. And sometimes getting insurance on $1 million, $2 million house can be quite expensive.
It can. There actually there's a company that we're aware of, and there are a few out there that specialize in luxury, just like there's companies that would specialize in rural properties, companies that specialize in condominium. There's also companies that specialize in luxury. So if you need a specialty in any of those areas, we certainly have lots of contacts. We gladly provide you that information. And the neat thing with the luxury insurance provider, you'd think that you'd be paying more because they're a specialty, but in fact, you pay less than you would from somebody conventionally that would give you typical insurance on a luxury property, but that they don't specialize in that. So contrary to probably popular belief, often going to somebody that specializes in a particular thing like luxury market actually reduces your cost and gives you other perks, additional benefits in that insurance policy. So we've got a great contact there, and so if you want information on that or any other insurance provider, we'll certainly provide you what we know and who we know, and you can connect with them and see if they're a fit for you. So you'd give us a call at 613-860-4663. You can also connect with us online, deckerteam.com. You can see archive shows there. This one's been on insurance, and we've been happy that you've been able to participate with us here, and also on chri.ca.
And if you're listening to this show live, it's August 17th. And so you're listening to it live on CHRI. Tomorrow is our Ottawa home hunt, and we're going to just have fun. If you want to come out and share in the fun, or hopefully you're registered and you'll be playing the game with us. So you can watch archive shows, like Yetta said, at deckerteam.com, and we're glad we could spend this time with you.
Yeah, and so you've joined us for the Inside Track on real estate. Each week we feature a different topic. We'd love for you to provide us some questions, some ideas for topics. We've been getting lots of suggestions already, and we're certainly welcoming more. So you can connect with us again, deckerteam at chri.ca, or always through deckerteam.com.
Bye for now.
Bye, have a great day.